Energy will play a key role in the Trump 2.0 administration, with the president promoting policies intended to boost domestic energy production.
We will be a rich nation again, and it is that liquid gold under our feet that will help to do it.
To achieve that energy dominance, Trump will issue a number of orders in his first days in office that would roll back regulations on oil and gas drilling, natural gas projects, and emission standards. Here's some of the key areas for investors to watch. Trump plans to reverse offshore oil drill bans that were issued by President Biden in early January. This includes projects in the Gulf of Mexico and Alaska. Though the U.S. is producing more crude oil at any other point in time and more than any other country, Trump sees increased oil production as a key to lowering the cost of energy and ensuring national security.
The inflation crisis was caused by massive overspending and escalating energy prices, and that is why today I will also declare a national energy emergency. We will drill, baby, drill.
It's a matter of the price when it comes down to it, because one issue that might limit the drill, baby, drill is that oil companies are no longer that wildcatter kind of situation. Investors say, no, if you're drilling, I want you to make money.
That's IBD news editor Ed Carson. He explains that even if Trump reverses drill bans, it's unclear if oil companies will immediately change strategy. The number of active rigs drilling for oil and gas in the U.S. fell to its lowest level in 3 years, according to recent data from Baker Hughes. Drilling rigs targeting crude oil fell from 480 to 478, while rigs directed at natural gas dropped from 100 to 98. The active rig count is seen as a leading indicator of future oil and gas production.
It's not just the price today. These oil companies have to be saying, if I make that project, in 3 or 4 years, is that price going to be profitable for me? So that's a tricky decision here, because a lot of costs have gone up for energy companies. But I think there's definitely the potential for more energy production as a result.
Trump will also have the courts to contend with. He unsuccessfully tried to reverse drilling bans by President Obama back in 2017. Trump is also expected to end the Energy Department's freeze on approving new liquefied natural gas, or LNG, projects. Carson explains the impact that would have on natural gas stocks.
If Trump does that, there's going to be more production and more higher prices and benefit the natural gas industry. You just know that will, just because you're creating a much bigger market for U.S. natural gas, really what it comes down to.
Carson adds that the high transport cost of exporting natural gas overseas might benefit domestic LNG producers.
Transporting natural gas is expensive. It's just harder. That's pipeline. That's fairly domestic, or at least say North America. But if you export, do the LNG, that can really mean that producers can produce a lot more and the prices will be relatively higher because the market is now more global. It's definitely going to help companies like Cheniere Energy, which are LNG plays, and those have done very well.
Chris Wright, who's the CEO of Liberty Energy and Trump's pick to head the Energy Department, emphasized the role LNG and nuclear power would play in expanding domestic energy production.
To compete globally, we must expand energy production, including commercial nuclear and liquefied natural gas, and cut the cost of energy for Americans.
Trump will also take aim at regulations that could impact the EV market. This includes rolling back tailpipe emission standards and reducing fuel economy rules.
With my actions today, we will end the Green New Deal and we will revoke the electric vehicle mandate, saving our auto industry and keeping my sacred pledge to our great American auto workers.
Those things would, at the margin, make automakers more willing to make big gas-guzzling SUVs and fewer EVs at the margin. Now, they have to decide, is that really going to last? If they do all these things and then a new president comes in 4 years and says, no, we're bringing back those rules, those are tough questions. How much? And it depends on how much they're losing on EVs.
Carson says that profit margins and not policy might have more of an impact on automakers' production strategy when it comes to EVs. He adds that the rollback in emission standards might also be a mixed bag for Tesla.
It could be something that helps Tesla, because if other car makers say, yeah, we don't need to make EVs down the road, that would be positive. On the other hand, Tesla makes a lot of money selling credits to other automakers for failing to meet those standards. So if they don't have to meet such tough standards, Tesla won't get as much cash. So that's very much a mixed bag in terms for Tesla. It's hard to know how that'll shake out.
Carson explains how these regulatory rollbacks might be particularly beneficial for hybrid car makers.
Hybrids are just sort of a transition kind of a situation, and some of these plugins, less so in the US, but some of the new Prius are there. They're pretty high mileage, And so you could see that automakers sort of hedging their bets. And consumers hedging their bets. A lot of people still have range anxiety. People want to know, I want to be able to go a long distance, and then if I have to recharge, I can do that in 2 minutes, not 30 minutes or 40 minutes. I think hybrids are a way for automakers to meet some of the emissions rules and tailpipe rules, but also serve a consumer who is a little bit anxious as well.
So, how should investors approach the energy trade under a new Trump administration?
You can definitely play these things. Just know that price is what pays, and that's so underlying. You can look at it and the stock may look great. You're looking at the fundamentals, you're looking at the technicals, everything looks good. And then guess what? If oil prices drop 6%, an oil producer is going to fall quite a bit on that news. So you just have to be aware of that scenario. That's with any commodity kind of play, is that the underlying commodity is such a huge factor for the stock price.